It's great to be talking, as always, to Sallie Krawcheck this morning. Sallie, as you just heard, is the CEO and co-founder of Ellevest, which is an investing platform that aims to close the gender investing gap. But she is also sort of not your typical tech entrepreneur. She's probably the only one you're going to meet who's also been called the most powerful woman on Wall Street. Because before she was an entrepreneur, she was also CEO of Sanford Bernstein, then went on to lead Smith Barney, Citi Wealth Management, Merrill Lynch. Did I get them all?
CFO.
CFO of Citi. Yeah. Knew I would leave one out. So I want to talk about that, but first I just want to ask you to tell us a little bit about Ellevest and what your mission is.
Yeah. So I didn't actually set out to become an entrepreneur, though it is so much fun when it's fun, and so much more fun than being in corporate America, and so much more terrifying than any day I had in corporate America, so I'm absolutely fully alive. But Ellevest is a digital investment platform for women. Had we been sitting here on stage 2.5 years ago, and Kristen, you would have said to me, "Hey, Sallie, I've got this great idea for you. You should start a digital investing platform for women," I would have said, "Kristen, you're sexist. That is a horrible idea. How frigging dare you? You know, what do you think we women need something different from men?" And I would have sort of, maybe not said this, but assumed that meant we needed some remedial financial education. We needed something that was a little simpler, you know, et cetera. And I would have thought that because every big financial institution has had a women's initiative, and every big financial institution has had lots of financial education, typically accompanied with Chardonnay. I heard of one the other day that did facials, so facials and stocks, and they just all fell flat. And then one morning it came to me that while we talk about the gender pay gap in this country, there's also a gender investing gap, and it can cost some women hundreds of thousands, millions of dollars over their lives. It can cost some women as much as the gender pay gap, and nobody's talking about it. Now, why is this important? Because, of course, ladies, we all know, if we haven't quite articulated to ourselves, we all know that we will not be fully equal with men until we are financially equal with men. And this gender investing gap was not being addressed. We think, when we tend to think about it, we tend to think it's our fault. You know, but then when you look at Wall Street and the investing industry, it's 86% male. The conversations about investing are very war and sports-like. Beat the market, outperform, pick a winner. Investing TV, Jim Cramer, right? It's like being in a locker room. And the industry symbol is a bull, which is, of course, a phallic symbol. So in every way, the industry tells us it's for men. And women tend to think about investing differently. We're not about outperforming the market. We're about articulating and achieving our goals, right? It's about, I have something I want to achieve, and I want to invest to get there. And so we took all that into account in building it, along with the fact that women live longer than men, and women's salaries, unfortunately, peak sooner than men's, and build something that feels and looks more like a Tory Burch website than a, hey, here's the latest economic figures for you. Here's what the euro did when it outperformed the yen. Because what we found women were looking for is, I want someplace I feel comfortable, and I want something that's really tailored to me, as opposed to telling me how smart you are.
So at this point, what's your typical client like? Like, how old is she? What kind of assets does she have? Who is she?
So we're new. We actually only took the wall down the day before the election, because we were going to have a female president, so that just seemed like an amazing day to really celebrate in so many ways the fact that women were on the move. So that didn't exactly work out the way we were expecting to. And so we're new, although I'll tell you we're growing 20 to 30% month over month. And the typical woman is a professional woman. She's made her own money. She's in control in all areas of her life, with the exception of investing. Maybe she does a 401k. She's doing that at work. Maybe she has an account at one of the other providers, but she doesn't feel like she's got it. She is, interestingly, single and married. Some would hypothesize it would be all the way single. Yep. But what we're finding is what we're providing for her speaks to her so much that she's coming in anyway. And so we have a terrible couples experience, but she's making her way through it. Yep. And of course, our retirement assets are separate from our spouses if we are married. So if there's an age, though, on the first day we opened it, we had a 22-year-old and a 67-year-old as our first couple of clients. But on average, these are women who are, let's call it 25 to 45 on average, who are mid-level professionals who, are ready to close that gap.
So, obviously, I'm sure you still have a lot of connections in the financial world. Why did you decide to do this on your own as opposed to partnering with someone?
So, great question. I think you may know the answer. I wasn't going to do this on my own. I was like, I have no desire to be an entrepreneur. Why would I do that? Although you do get to wear these cool leather jackets, which is super awesome. I threw away all of my corporate gear. Yeah, amazing. But I wasn't going to do it on my own. I sort of walked through this. I'm like, oh my gosh, women control $5 trillion of investable assets. 90% of us manage our money on our own at some point in our lives. We rank the existing financial services industry 33 out of 33 of the industries that serve us. We keep the majority of our money in cash. This is the biggest opportunity in consumer financial services, but I'm not an entrepreneur. So I went to meet with a couple of big bank CEOs, friends of mine, sat down with one of them, went through all the data, and I promise you, he said, well, that is Sallie. That is just so interesting. And then he looked off in the distance, as big bank CEOs sometimes do, sort of seeing the future. And then he goes, but don't their husbands manage their money for them? And I'm like, dude, I just told you 90% of women manage their money on their own at some point in their lives. He couldn't even hear me. He couldn't even hear me. And I saw that to a lesser degree with others. And so all of a sudden it struck me. So back up. I can't believe how fortunate I've been in my life. I really can't. I grew up in Charleston, South Carolina. I took typing classes to prepare me for my career as an administrative assistant. I can't believe I got to run Smith Barney and Merrill Lynch and do these things. And what struck me as I was thinking, I don't want to become an entrepreneur, is I've had this good fortune visited upon me. I see this inequity that impacts women, that leaves women in jobs they don't want to be in, that leaves some women in relationships they don't want to be in, that keeps women from starting the business that could change the lives of other people because they're not investing. I call investing the best career advice women aren't getting because we don't have as much money. And if I'd had this good fortune and I see this problem and I don't do it because I really don't want to be an entrepreneur, I should shoot myself because it wouldn't be right. And so even though I'm not a traditional entrepreneur, I said, I know how to pull this together. And so I went out and found a fintech exec, someone who had been through it before as a co-founder, so different from me that, as Alexandra will tell you in the audience, we agree on nothing, like nothing. But the skill sets are different, and said, okay, we can together, the two of us, I can pull together the people on the investing side, which is super hard. He can pull together the people on the tech side, which is super hard. And I think between the two of us, we can build something that's really different.
And what's been the biggest surprise for you during this process? The biggest surprise about going from corporate world to entrepreneurial world?
It's just hard. I've said it before, I'll say it again. Being an entrepreneur is harder than running Merrill Lynch, and I'm the only person who can say that. It's a wake up at 3:30 in the morning thing. It's a, dear God, we're going to fail, and it's my fault thing. So it's hard. The other thing is that I had to, that I sort of knew, but it was interesting to make myself let go of, is of course I came in thinking I knew what to do. I mean, hello, I've had 30 years in the industry, and I'm a woman. So therefore, I know what to build. And I was just wrong, and I brought my own gender biases to bear. So an example, I really thought women weren't investing because of our negative emotions around money. And so I really thought we needed to go take her on an emotional journey in which she would explore her emotions around money. Right? That's what women do, right? We take the Cosmo test about the boyfriend and the parents and the whole thing. I thought we need one for money. And we actually spent real money on it. And the women did this. It's like, I have emotions around money, but I don't really care.
Right.
I don't want to explore them. Can I start my friggin' business in 5 years? That's what I want to know. So we found this enormous practicality. We also believed that, you know, women like to get together and talk, right? Another gender expectation. And so let's get them together and talk. They're like, I don't want to do that. I don't want to talk about my money with anybody. I want to know what everybody else is doing, but just help me get there. And so what we found is that women were just very practical about it. You know, get me in, get me out. The whole experience, which includes a free financial plan, can be done in 10 to 15 minutes, right? You know, and then very practical. Am I on target to achieve my goal? If I fall off target, let me know and let me know what I have to do to get back on target. You know, very practical stuff, but I don't want to talk about standard deviation. I don't even want to talk about whether you're investing in a mutual fund or an ETF. You're a fiduciary. I trust you, or I need to trust you. And I don't want to talk about, again, what the markets are doing. Just talk about me, not that.
So I feel like I should also make sure we mention the title of our session, which is Always Play in Traffic. So Sallie, what does that mean?
Yeah. So the number one unwritten rule of success in business, and this is, by the way, particularly true for women, is to network. That your network is make or break in your success. And this is particularly true as an entrepreneur. It's really who you know. And it's interesting, as I've been spending time out in Silicon Valley and spending time with funders for the business, how that warm connection helps so much. I just can't even imagine trying to fund a business by going to the website of a venture capitalist, typing in your information, you know, putting in the deck, and then hoping for a phone call. Because I have to tell you, it is so hard when you've even known the person for years and you show up and ask for money. You know, that to go through that hoop is very tough. Your next business opportunity is much more likely to come from a loose connection than a close connection. That you and the person who sits in the office next to you know all the same things. But it's the person who you meet at the conference who, you know, next week, you know, you don't have to go play 18 holes of golf and do that whole network, you know, that old dude networking thing where you golf and you drink and all that stuff. But, you know, next week you send someone a piece of research they might be interested in, tell them about a startup that they might find fascinating, the young person who's looking for the job they're trying to fill, the CMO who they're looking for, the board position that's available, the advisory position that's available, the journalist who's looking for a quote. You know, where you just have this group of people who are not your friends, they generally don't come to your home, who you just are in contact with. That's where your next opportunity is most likely to come. That's where I find, you know, when I'm funding the business, for example, it's hard to fund it from friends. It's hard. I have one dear friend of mine who's a funder of our business, and, you know, she says it's not weird. I just feel weird about it. When I see her, it's hard for me to be her friend because I'm so busy talking about the business and telling her how I can't really stay very long because I got to go back and work on the business. And I'm terrified of losing her money. Terrified. So it's that next level connection where they know you well enough to know you're great at what you do, the idea is great, where the money tends to come from. And then it's that next level, you know, where you're putting the email into the website, where the chances are, well, a snowball's chance in hell or some, you know, about there. And so the playing in traffic is, as much as I every day want to just put my head down on my business because I'm so fascinated by it, it's making sure that you're sending those emails, that you're out there, that you're seeing people, that people know what you're doing. In fact, really interesting, I published a piece in a Fortune broadsheet the other day. That's a way of playing in traffic. I'm out there. My visibility is high. I got an individual who's interested in investing in our business connected to me because she read the article, and she said, this is fascinating. I'd love to get to know you. She and I were on the phone yesterday. Kristen, I'm telling you, she introduced me to 7 different venture capital firms, right? One article, one time. So getting your head up You know, you just don't know what's going to happen, but it's going to be good.
Let's talk a little bit more about funding, since you brought it up. You guys have raised $19 million, and it's no secret that most VCs are white dudes.
I love white dudes. I've been married to a couple of them. I think they're just amazing, amazing, fascinating creatures. Come on.
Their place.
Christine, what do you have against white dudes?
But yours are not all white dudes. You have Melody Hobson, Venus Williams, Teresa Gao. How did you do that?
Ajay Banga.
Yes, yeah.
Right,
How'd you pull that off?
In terms of getting a diverse group of investors, because we focused on it. You know, it doesn't happen by accident. It happens by being thoughtful about, first of all, having that network, having folks who are that second level that you can call on, and being very thoughtful about the people that you're approaching. And I'll tell you, I sort of, in our first round, Morningstar was the lead, and a group of Wall Streeters with some diversity were also investors. And I looked at it and I said, I'm a little disappointed with it because I wanted to raise the money quickly, so went to people I knew, but it didn't have certainly the gender diversity I was hoping for. So 6 months before we wanted to raise money, in the second round, I went out and started connecting with individuals, really hand-picked some individuals who I wanted to have as investors, and began talking to them, updating them, et cetera, over that period of time. And why 6 months? Because it's a lot easier to start to talk about a business, introduce it, update them. You know, we said we were going to do X, we did X plus. Oh, and then last time we got together, we said we'd do Y, we did Y plus, right? Get their interest level, et cetera. Are they returning your emails? And then 6 months into it, say, would you like to invest? Is a lot better than, hey, how you doing? You know, white wine or red, and would you like to invest? Right? That generally doesn't get a yes. That generally gets a very quick no. So you have to be thoughtful and planful about who you want involved in your company. And that's what I think such a tragedy can be, is that, you know, you hear people write about how important the investors are and you should have the right investors. But, you know, the challenge is sometimes you just have to take money. And the money comes from whoever it comes from. And if you got a jerk investor, you've got a jerk investor. And so thinking about this way in advance as opposed to, geez, it's time to raise money, will give you the opportunity to get to know people better, get to check on people more, and hopefully get and outperform what you say you were going to do, and hopefully therefore bring in really high quality investors.
So, you know, this room is maybe half men and half women today. I am sure, in fact, I know you have gotten questions about the fact that your target market is women, and that X's out half of the population. And then maybe that's limiting, you know, what you could achieve, how big you could get. So what is your response to that?
Oh my God. Well, here's my response. You know, it's funny, you asked it much nicer. I was at a conference not so long ago, and there was a gentleman, or as you might say, a white dude, on the stage with me, and he goes, that's quite a niche you've identified there, Sallie. I'm like, yeah, women, half the population. Quite heck of a niche. I don't know how other people have overlooked this niche. Maybe too small. Here's the thing. I think as all of you as business people know, if you are talking to everybody with your business, if you are targeting everybody in your business, you are targeting nobody. And so, you know, today, so many of these investing firms, perhaps all of the major investing firms, are targeting men. They don't know it, but they are. And the results demonstrate that they are, because in general, if they're not in the 401k business, which tends to be gender neutral, their clients tend to be about 85%, for some of them 90% male. And they don't think they're talking male, but again, when you're talking about outperforming, when you're talking, you know, you've got that sports-like, you know, sort of approach to it, when your advisors, again, are 86% male, you may think you're talking to the entire population, but you're not. Here's a stunning statistic. In Merrill Lynch, the business overall, that men leave their financial advisor if neither one of them die at a rate of 2% a year. Women leave that same financial advisor in the year after their husband's death at a rate of 70 to 80%. Okay? So that company, who, by the way, again, their symbol is a bull, may think they're gender neutral, but they're lying to themselves, right? So we said, all right, we're just going to be very clear, and that we think we can build, an okay business targeting $5 trillion of investable assets. In order to build like a great business, we need less than 1% market share. Okay, less than 1% to build a $1 billion type of business. And that we believe there's room for one person at least to talk directly about the money issues that we women care about that nobody else is talking about. Let me give you an example. The cost of a career break. Now, if I were to say to you, you're about to take a career break, you make $85K a year, how much is that going to cost you? Your answer would be, oh, Sallie, I can do, yep, I got it, $170K. And I would say $1.7 million, 10 times what you think. Why? Because you're not investing during your career break. You're not contributing to your 401K. You're not contributing to Social Security. But very importantly, on average, women take a double-digit % pay cut when they take a 2-year career break. More after 3 years, more after 4 years. And there's a period of time when you're out of the workforce that it gets very difficult to come back. I have nothing against career breaks. I have everything against career breaks that we don't quantify, and we don't understand the impact on our lives. So that kind of content, that kind of discussion, right? That kind of targeting, another targeting. Women's salaries, I mentioned earlier, peak sooner than men's, right? That's very important when you're doing your financial planning. It's not fair, but it's very important. And so being the one that takes that into account. So we took the idea, we'll give up half the population, right, in order to really target the needs of these professional women. And of professional women in our age range who've expressed an interest in investing is about a 22 million person market.
Okay, not a tiny market. Do we have any questions right now? If I can circle back in a minute. All right, you guys think about it. I have one more for you. I want to ask you a little bit about risk. So you have taken on a lot of risk at different points in your career, whether it was, taking on this, like leading a business that was struggling or starting your own company. At this point in your career, how do you think about risk and decide when you're going to take it?
Yeah. So no risk, no reward, right, at all. It's interesting. When I first got into my first research analyst job on Wall Street, I do remember somebody telling me, you've sort of hit the jackpot, which is that on Wall Street at that time, you can make a very good living by being mediocre. That the industry was booming so much that all you had to do was sort of keep your head down, keep in the pack, and you do well. And I remember thinking, well, that's not what I want to do. I actually want to have some fun. And I bring a certain perspective to this, which is we're playing with the house money. I mean, look at us, right? How awesome is this that we're all sitting in this room today having these fascinating conversations, meeting these enormously interesting people. We're so lucky. And we're not, fortunately, we have food on the table. Fortunately, we've got jobs. Fortunately, we're not, in some country in the world where we're in a repressed regime, at least yet. Not yet. That was whispered. But that, we really are, we're so fortunate. So, okay, so if I'm taking business risk, the upside then is I learn a lot, I push myself, I have a fascinating, interesting, unbelievable life, I could make a lot of money, I get to work with fantastic people, and my downside is public failure and humiliation. By the way, I've seen that because what you were too kind to mention is that I do actually hold a world record. We didn't want to intimidate the audience early on, but I am the only woman to be fired on the front page of the Wall Street Journal twice. Right? So it was so much fun the first time. I'm like, let's do that again. Once you've been through that, it's really a pretty singular experience because there is obviously, I woke up the next morning, I'm like, honey, do you think anybody saw the Wall Street Journal today? And he's like, yeah, I'm pretty sure like everybody saw the Wall Street Journal today. And you go that low, and then you realize it's not life-ending. And by the way, nobody cares. Right? You sort of, oh, God, everybody's talking about me. Maybe for 6 minutes. I mean, at the outside. 2? Did you see what happened to Sallie? I know. What a bummer. Hey, back to about me. Right? Like nobody cares. They care about themselves. And so why not give yourself the opportunity to take on risk and do something amazing? You know, because it's just humiliation. It passes.
Yeah. I didn't ask you about it. I just want that on the record.
Yeah, you were kind. You were really kind. Some people put it in the introduction. I'm like, oh, come on.
I have always admired that you have been so willing to talk about that. What has that? Why are you so out there about the fact that that's happened to you?
Look, I'm out there, one, because I'm out there. Right. You know, I have plenty of friends who've gotten fired. And I didn't have, the opportunity to lie about it. You know, and I have so many of my friends who are like, oh, some people said I got fired. I didn't. Let me tell you why it was my choice. And they spend 45 minutes describing it, and you're like pulling your eyes out of your face because it's so boring. So I didn't have that option. So I figured, okay, it's out there. Let's firstly share the lessons I learned. I don't know any other women who really talk about getting fired. And there were some super important lessons from it. So I might as well, as long as we're out there, share it. And the other thing is that the research tells us that women take failure harder than men. And that men tend to, when they fail, blame outside factors, right? It was my jerk boss. You know, it was the business just wasn't set up right before I got there, whatever it is. And women tend to, it's all my fault. You know, if I only could have gotten through to my boss better, this wouldn't have happened. So my talking about it, I hope, helps to normalize it to some extent and to share the important lessons. And I'll tell you one really important lesson is that, so the first firing, I got into a business debate with the CEO of Citi. I thought we should reimburse clients for products that we missold to them. He did not. We went back and forth. We eventually got him partially reimbursed, but he fired me for it. The second one, I was reorged out. And I was reorged out at a time when the business was growing, gaining share, beating plan. Like I felt, you know, I've never had better business results, and they sent me home. And 2 days after I got fired, because like the first day after I get fired, I like to really spend it feeling sorry for myself. So it's a national day of self-pity. The second day, I called the members of the board of directors and said, what could I have done better? You know, first of all, thank you for the opportunity. Number two, what could I have done better? And what they told me was, you had nobody in there fighting for you. So the lesson from that, two lessons, is Carla Harris at Morgan Stanley says, every important decision about your career is made when you're not in the room. Whether it's funding your business, whether it's promoting you, it's made when you're not there. The second thing is, who's in that room fighting for you? And I didn't have anybody in there for a lot of reasons. My boss who brought me in had left and retired, but I had not built a strong network such that when my name came up, somebody said, don't fire her. How about we fire somebody who's missing plan, right? And the comeback, you know, was, well, imagine if we had somebody else in running the business, it would be even better. So a couple of lessons, and if it just helps anybody, then it's worth sharing.